Good morning. The math ran last night. Here is what changed, and how historically similar conditions have evolved. We are operating under stagflation's strong regime, with a confirmation score of 18 of 19 series aligned. That is a high-conviction read. Overnight, fear and greed sentiment sits at 37.2, placing us in the fear zone, while S&P 500 futures trade essentially flat at plus 0.02%. Volatility index sits at 19.39, placing it at the 72.1 percentile of the 2-year range. Elevated but not extreme. Historically, when regime alignment reaches this threshold with fear-based sentiment, regime persistence becomes a key mathematical question. We have 3 signals to examine. First, high-yield OAS, BAML 0, a 0 HIM 2, currently trades at a level indicating green momentum. Green momentum here is defined mathematically as the 30-day rate of change above the 60th percentile of its 2-year distribution. In 9 of 11 historical instances when high-yield spreads displayed this momentum during stagflation regimes, credit conditions remained resilient through the following month. Second, core inflation excluding food and energy, CPLF-ESL, is also displaying green momentum, defined as 30-day rate of change above the 70th percentile. In 7 of 11 similar historical cases, headline inflation follow-through materialized within 2 months when this signal appeared. Third, payroll employment, PAYMs, shows red momentum, defined as 30-day rate of change below the 40th percentile of its distribution. In 8 of 10 observed historical instances with this labor market deceleration pattern, broader growth slowdowns followed within the subsequent quarter. The regime we are observing is stagflation strong. Our confirmation score is 18 of 19 economic series aligned with this regime. Historical persistence data tells us stagflation has held in 3-month windows, 52% of the time, across 11 observed instances with comparable alignment. The most common transition from this mathematical configuration is acceleration, observed in 28% of historical cases, suggesting inflation impulses may dominate growth effects near term. 2 if-then triggers are mathematically active. If the 10-year Treasury yield crosses 4.45% and holds for 5 consecutive trading sessions, the inflation composite has historically shown acceleration in 9 of 11 comparable instances, increasing the mathematical case for an expansion to acceleration regime transition. If fear and greed drops below 15, and holds for 5 consecutive sessions, regime confirmation score deteriorated in 7 of 9 historical instances, which would formally lower our confidence level from strong to moderate. The math identified conditions across 19 economic symbols this week. That pattern exists, but that is a different conversation. These are historical mathematical observations, not predictions and not advice. Given Analytics is not a registered investment advisor. Hypothetical results may vary from actual results. Market conditions can change at any time. May potential educational. This is Given Analytics. Visit givenanalytics.com.